Welcome back. Today, we are diving into a story that could fundamentally rewrite the rules of the digital economy before your eyes even blink. Senior U.S. officials have just held preliminary discussions with the biggest names in artificial intelligence, floating an idea so radical it sounds like science fiction: the government buying equity in these companies. Yes, you heard me right. We are talking about a potential shift from purely private ownership to a model where Washington holds a direct financial stake in the future of tech giants like OpenAI and others. This isn't just about regulation or safety. This is about wealth distribution and national sovereignty over the tools that will define our next century. If successful, this move could reshape how AI profits are generated and who actually benefits from them. In the next few minutes, we're going to break down exactly what this proposal entails, why it's happening now, the massive hurdles it faces, and what it means for you in your daily life. Let's get into it. The core of this developing story is a startlingly simple concept: the federal government acquiring shares in major artificial intelligence firms. Reports emerging just days ago indicate that senior U.S. officials have already initiated these preliminary talks with industry leaders. The idea, championed prominently by figures like Senator Bernie Sanders, and now seemingly picked up by the Trump administration for its own strategic reasons, is to force a 50% or significant minority stake in these companies into public hands. Why? Because AI is no longer just a sector. It is the new oil, and the infrastructure required to build data centers that consume vast amounts of energy is becoming a critical national asset. Imagine a world where the U.S. government doesn't just regulate how an AI model makes decisions, but actually owns a piece of the company behind it. This changes the dynamic entirely. Currently, these companies are driven by private profit margins and shareholder pressure to scale as fast as possible, sometimes at the expense of safety or ethical considerations. By injecting the state into the ownership structure, the goal is to align the corporate agenda with public interest. It's a move from watching the train to being an investor in the train. The talks reportedly involve creating a new public wealth and ownership model, suggesting that the government isn't just looking for control, but wants to participate directly in the economic upside of this technological revolution. This is a departure from traditional state-owned enterprises. Instead of running the companies themselves, they are buying into them, hoping to leverage private sector efficiency while ensuring public oversight. What makes this proposal so distinct from previous attempts at AI governance is its financial mechanism. Historically, governments have tried to manage technology through mandates, bans, or strict regulatory frameworks that dictate what can and cannot be done. This new approach flips the script by using capital as a tool of influence. When the government holds equity, it gains a voting voice on board decisions, access to proprietary data models under specific terms, and a direct say in how profits are utilized. Consider the implications for a company like OpenAI or a massive cloud provider. If the White House is considering these talks, it signals that the administration views AI as a matter of national security and economic stability rather than just an innovation market. The proposal aims to prevent a scenario where a single private entity or foreign-owned conglomerate controls the foundational models upon which the global economy runs. By securing a stake, the U.S. ensures that its own interests are baked into the algorithmic decision-making processes at the highest levels. It's a hedge against monopolistic practices and a way to capture some of the immense wealth being generated by these firms. The narrative here is one of proactive ownership rather than reactive regulation, acknowledging that the speed of AI development outpaces the ability of traditional laws to keep up. However, for all its promise, this plan faces a minefield of legal and structural obstacles that could ultimately derail it. As reports suggest, the legal mechanism for an AI firm to voluntarily or mandatorily turn over equity to the government is currently unclear. We are dealing with companies structured as complex limited liability entities, often with intricate global holdings, special purpose acquisition companies, and diverse shareholder bases including venture capitalists, employees via stock options, and early investors. Forcing a transfer of ownership could violate existing contracts, trigger massive tax events for current shareholders, or even be challenged in court as an unlawful seizure of property without just compensation. Furthermore, the political will required to push this through Congress is immense. While initial discussions are happening at a high level, several people familiar with the matter have cautioned that the deal may not come together. The tech industry has deep pockets and significant lobbying power, Convincing them to cede control or accept new equity structures without immediate compensation for existing stakeholders is a tall order. There's also the question of expertise. Does the government have the talent pool to effectively manage or influence a board of directors dominated by Silicon Valley engineers? If the legal framework isn't clarified soon, these talks risk stalling indefinitely, leaving the status quo intact. The uncertainty itself creates a chilling effect on investment, as companies may hesitate to innovate if they fear sudden changes in ownership structure could wipe out their valuation overnight. So, what does this mean for the future of technology and society? If this model takes root, we are looking at a hybrid economy where public and private sectors coexist within the same digital infrastructure. For users, this could translate to AI systems that prioritize long-term societal benefits over short-term engagement metrics or ad revenue. The transparency of these decisions might increase because government stakeholders have an interest in accountability. We could see a shift toward public wealth models where profits from AI are partially redistributed through infrastructure funding, education initiatives, or universal dividends. On a practical level, this signals that the era of total privatization for critical technologies is over. Companies will need to navigate a dual loyalty system, pleasing private investors while satisfying public mandates attached to government stakes. For developers and researchers, it might mean more open access to certain models if they are backed by public funds, democratizing innovation further than ever before. But it also introduces new risks of bureaucracy slowing down rapid iteration. The key insight here is that this isn't just about politics. It's a fundamental restructuring of how value is created in the digital age. Whether it succeeds or fails, the mere consideration of it forces every stakeholder to rethink their position on who owns the future of intelligence itself. There you have it. We've moved from the headlines of government talks about equity stakes to a deeper understanding of why this matters for our economy and society. Whether this bold proposal becomes law or remains a theoretical framework, it marks a pivotal moment in how we approach artificial intelligence ownership. The idea that the state could hold a 50% stake in an AI giant is reshaping the conversation on wealth distribution and national security. If you found this breakdown of the future of tech ownership insightful, make sure to hit that like button and subscribe for more deep dives into the stories shaping our world. Let me know in the comments. Would you be okay with the government owning a piece of your favorite AI company? Do you think it's necessary for safety, or does it stifle innovation? Drop your thoughts below. Thanks for watching, and I'll see you in the next one.